Hey, good Tuesday morning, everybody. Kip Harridge here with our midday video cast. Hope you're all having a great morning as we get into the last 3 hours of trading here. Um, you know, my druthers capitulation as we wanted to see. We got the Fed meeting started today, and then of course tomorrow the Fed rate hike decision, and then followed by the rock star Jay Powell. And we get the presser, and he's just horrible with these. Tyler did this work years ago. You probably don't know what I'm talking about. A lot of people have done it since. The markets fall when he starts speaking, excuse me, something like 90% of the time. It's unbelievable. He's the worst Fed chair when it comes to communication as far as market performance that we've ever had. And they track all this stuff. So, investing is about probabilities. Smart money investing is about probabilities. And that's what we're telling our folks this morning is, ideally, I want to see capitulation. Every great bottom that I can think of had either capitulation or at least a double bottom. One of those two. Not a rule, doesn't have to happen. But if we'd gotten a really bad market this week in advance of the Fed meeting, and then on the rate hike, it was set up for a fantastic bear market rally. The market never gives us what we want, of course, ideally, but that's what I wanted. I don't think we're going to get that. Right now, the Dow's up 125, Nasdaq's up 16. Internals are okay. Put-call ratio is still above 1. Obviously, investor sentiment is still very bearish. I mean, in a normal market, this market, I'd be long this market. I'd have calls probably on the Qs. The Qs are so oversold. I'd play this from the long side, but you can't do that in this market because we are in a bear market. Rallies are to be sold. They just are. This is not a market that can be trusted right now. Let me tell you why. 3 reasons. Number one, if you're long, you're fighting the Fed and you're fighting the tape. That's just a cardinal rule number 1 in the VRA investing system. It's right there. Number 1, you can't fight them both. You don't want to fight either one of them. You certainly can't fight both. And right now, if you're long aggressively, you're fighting both the tape and the Fed. History tells us, number 2, that when quantitative tightening starts, the markets go lower. Stocks go lower, not by a little bit, but by a lot. Again, we don't have a lot of experience with this, but what we do from 2008, 2009 on, and in Japan as well, by the way, they've never really done QT, but when they've lightened up on quantitative easing, they've seen the same thing, and they go back further with their quantitative easing than we do. The markets just go lower. So we're fighting these things. If you're aggressively long, you're fighting. It's about probabilities. You're fighting these things. So number 3, Team Biden, intentional destruction. We started talking about this with the pandemic a couple of years ago because nothing made sense. None of it made sense. They're all acting together in unison, right? All these arbitrary rules and laws out of nowhere that made no sense, from the mask to lockdowns to social distancing. None of these things made any sense, but we were all doing them, and the media was leading the charge. Propaganda, right? You see that, and the smart money investor goes, something's fishy here. It's just not stopped. So now we see every decision they make has been worse than the one before. That's intentional. Why would the markets and the economy be any different? That's really our biggest concern out of all of it. And I think that's why we are in a bear market. Matter of fact, I'm sure of it. So when looking at probabilities, I think we're at 80% probability that the market's going to go lower. That's where I'd put it right now. Now, having said that, if you're a more active investor, trader, some of you are, some of you aren't. But if you are, I think there's some great trading opportunities here. We're using those in UVXY. We have it both UVXY, the volatility ETF, in the portfolio, VRA, and in parabolic as a hedge. We're going to keep that there. We've also lightened up some. We're also very heavy in the groups that you want to be heavy in. That's energy stocks, precious metals, and miners. I put out a piece this morning about the miners and about gold and silver, especially the miners. We're in the second year of a global commodity supercycle. These charts now have been beaten up badly, like right down to the 100-day moving average. Some of these down to the 200-day moving average, individual stocks. This is when you buy them, right? This is when you buy them because this is the group that's going to have a long-term energy stocks as well, which, by the way, are acting fantastic. You've seen XLE and these other energy stocks, they're just zooming higher, even in the face of this bear market. So there are places that if you don't want to be in cash, you can reside, you can stay there. And even if you don't make a lot of money, you know what? Maybe you don't lose money. And you're building positions, right? You're building positions in great companies that are going to benefit from this when we come out of the backside of Biden's intentional destruction, which we think will be in the midterms. Again, high probability. The year after the midterms is it's the most bullish of the election year cycle. So that's only 6 months away. So we just have to be smart going into that. Final comment. I put this out yesterday. The analytics are very clear. When what happened yesterday with the NASDAQ 100 fell 1% to a new 52-week low, then finished 1% higher. Okay? That's only happened 14 times in history since the NASDAQ 100 has been around. And it's overwhelmingly bearish for the next 1 to 4 weeks, with losses on the average of 8% one month later. So 1 to 4 weeks. Average losses of 8% 30 days later. So any rally we have now, I believe, will be met with selling pressure. As I told Tyler, we talked for this video cast this morning. I think the market has a magnet. I think the magnet is going to take both the S&P 500 and Dow Jones down 20% to official bear market status. That makes sense. The smart money's pushing that big time. They're not buyers anymore. Now they're sellers. They're shorters. We've already seen NASDAQ and the semis and the Qs already fall into bear market territory. Small caps too. Now we need capitulation from the Dow Jones and S&P 500. I think, again, probability-wise, that's the smart money play. That's how we're playing it. Should things change, we'll let you know. Looking for capitulation. Until then, we're sellers into rallies. Have a great day, folks. We'll see you at the close in our podcast. Bye-bye.